Hello, Gemini. I want to talking with you just like a communication interview. I'm the person interview you and you give me the answer. Therefore, every time we should not too long. You should not answer too long. And we should let the audience have time to absorb the information.
Understood. I'm ready for your questions. I'll keep my answers concise, like a good interview should be, to make sure the audience can easily follow along. Please, go ahead with your first question.
Today's topic, I want to discuss a new mergers, a company called SRM Entertainment. The code is SRM, and they have a merger with cryptocurrency foundation, Tron.
Okay, I see. We'll be discussing the recent merger between SRM Entertainment, ticker SRM, and the Tron Cryptocurrency Foundation. I'm ready for your questions on this topic.
After merger, the stock goes up a lot. After merger, the stock goes up a lot. And can you give an introduction about the price of SRM before the merge and after merge?
Certainly. The stock performance of SRM Entertainment, SRM, saw a dramatic shift due to the merger announcement. Before the merger news, SRM Entertainment was trading at a relatively low price. For example, on June 13th, the stock was around $1.45 per share. It was a small-cap company. After the merger news, the announcement of the reverse merger with Tron led to a massive surge. On June 16th, the stock price skyrocketed over 500%, reaching as high as 10.84 and closing at 9.19 that day. This indicates significant investor enthusiasm for the deal.
Yes, actually, the stock price goes from 50 cents about 2 weeks ago. I guess from that time, some people have already know the merger news. Therefore, they have some inside bias.
That's a sharp observation. You're right, the stock did see some significant activity even before the official announcement on June 16th. Looking back, SRM was indeed trading closer to 50 cents per share in late May 2025. It had a private placement financing announced on May 22, 2025, which involved convertible preferred stock at a 50 cents conversion price. This indicates it was already at a low point. The subsequent price movement leading up to the merger announcement often sparks speculation. While it's difficult to prove definitively without a formal investigation, an increase in trading volume and price before major public news can sometimes be attributed to rumors and leaks. Information, even unofficial, can circulate among certain investors. Smart money, positioning. Investors who conduct thorough due diligence might anticipate such moves. Technical trading. Some traders react to unusual patterns or volume surges before the underlying news is public. It's a common area of scrutiny for regulators.
Is it a scam trap or it is an opportunity? Let's dive into these mergers.
That's the million-dollar question for investors, isn't it? Whether this merger is a scam trap or a genuine opportunity is highly dependent on various factors and investor perspective. Here's a balanced view. Potential opportunity. Public market access for Tron. This merger gives Tron, a major blockchain platform, direct access to the U.S. public markets via NASDAQ. This could increase its legitimacy and attract traditional institutional investors who previously couldn't invest directly in crypto. MicroStrategy model. The plan for Tron Inc. to hold TRX tokens on its balance sheet, similar to MicroStrategy holding Bitcoin, could create significant value if TRX appreciates. Exposure to stablecoin growth. Tron is a dominant network for stablecoins, particularly USDT. Investing in Tron Inc. could offer indirect exposure to this high-growth sector. Faster path to market. A reverse merger is quicker than a traditional IPO, allowing Tron to capitalize on current market conditions. Potential risks, scam trap, concerns. Volatility of crypto assets. TRX, like any cryptocurrency, is highly volatile. The value of Tron Inc.'s treasury will fluctuate significantly with TRX price movements, directly impacting the company's perceived value and stock price. Regulatory scrutiny. While the SEC case against Justin Sun was paused, the crypto industry remains under intense regulatory watch. Future regulatory actions could impact Tron Inc. Justin Sun's reputation. Justin Sun has a history of controversies and allegations, which could deter some traditional investors. Reverse merger risks. Reverse mergers can sometimes be used by less established companies to gain public listing without the rigorous scrutiny of a traditional IPO. Share dilution. The deal involves convertible preferred stock and warrants, which could lead to significant dilution for existing SRM shareholders if converted and exercised. Sustainability of business model. The reliance on staking rewards for potential dividends and the direct correlation to TRX's price makes the company's financial health very tied to crypto market performance. In summary, it presents a unique opportunity for investors seeking exposure to a major blockchain project in a publicly traded format. However, it comes with significant risks inherent to both the cryptocurrency market and the specific entities involved. It's crucial for investors to do their own thorough research and understand these risks.
Great. Your answer is compelling, but remember, do not give too much of information every time, whether it's the answer of question or it's your comments. Keep it shorter. It is better than 300 word, less than 300 word. Thank you.
Noted. I'll keep my responses shorter and more focused going forward, under 300 words. Do you have any further questions about the SRM Tron merger that you'd like to discuss?
And here actually I'm going to discuss two topics. One is about step coin. Another is about the people behind the Tron Foundation, which who is the Justin Strain, because the management team is very important to a project. Let's begin with the stablecoin first.
Understood. We'll start with stablecoins, focusing on their role within the Tron ecosystem. Ready when you are with your question about stablecoins.
From the beginning of the blockchain, first is the Bitcoin. After Bitcoin developed several years, there appeared the first stablecoin and issued by Tether, who actually was investigated by US government for several times, but it seems okay. But right now, Tether is the biggest market player. And from the market capital, it seems they are about three times as another step coin, Circle. And could you please talk something about those two step coins?
You've highlighted two very important stablecoins, Tether, USDT, and USD Coin, USDC, and their distinct positions in the market. Tether, USDT, the pioneer with controversy. Launch, USDT, originally real coin, launched in 2014, making it the first widely adopted stablecoin. It was designed to be pegged one-to-one to the US dollar. Dominance, it remains the largest stablecoin by market capitalization, often 3 times the size of its closest competitor, USDC. Its early entry gave it a significant lead. Investigations. You're right, Tether has faced considerable scrutiny and investigations from US regulators, like the CFTC and NYAG, regarding its reserve transparency. They've been fined for misrepresenting the full backing of their tokens, though Tether maintains they were always sufficiently backed. This lack of full, traditional audits has been a persistent concern. Usage. Despite the controversies, USDT is incredibly liquid and widely used across exchanges and decentralized finance (DeFi) platforms for trading and cross-border transactions, especially on networks like Tron. USD Coin, USDC, the compliance-focused challenger. Launch. USDC was launched in 2018 by Circle and Coinbase, forming the Center Consortium. Transparency. USDC differentiates itself by emphasizing transparency and regulatory compliance. It undergoes monthly attestations by independent accounting firms, showing its one-to-one backing with cash and cash equivalents. This approach has earned it trust from many institutional investors and businesses. Growth. While smaller than USDT, USDC has grown significantly due to its commitment to transparency and adherence to regulations, making it a preferred choice for those prioritizing reliability. Key difference summary. The core difference lies in their approach to transparency and regulatory adherence. USDT, while dominant, has a history of less clear reserve disclosures. USDC prioritizes regular, auditable reports, aiming for a more regulated and trusted position in the market.
There is observation, and actually, uh, the market cap seems only 3 times difference, but actually transaction volume, I guess, maybe much more difference. USDT have a absolutely dominance in the cryptocurrency exchange or decentralized cryptocurrency exchange volume. USDC compared with USDT are much smaller. The advantage of USDC is they have to comply with the US government. It's because it's coming from the legacy financial aspect. USDT is coming from crypto, new, totally new, decentralized financial aspect. Therefore, they do not have much of the expertise to talking with the government, to use the lawyer, to cooperate with law firm and accounting firm. Can you please uh, talking something about those difference? Is my observation correct?
Your observation is largely correct and very insightful. Transaction volume dominance. Yes, even with a smaller market cap, USDT's transaction volume is significantly higher than USDC's, often by a large multiple. It acts as the primary trading pair on many global exchanges and is heavily used for cross-border remittances, especially in emerging markets. This makes it the liquidity king of stablecoins. Differences in origin and compliance. USDT, Tether, you're spot on. Tether emerged directly from the crypto space, prioritizing quick utility and liquidity for crypto traders. This move fast and break things mentality, while facilitating rapid adoption, often led to less emphasis on traditional financial compliance from the outset. Their history of reserve opaqueness and regulatory skirmishes reflects this. They've had to adapt to scrutiny rather than proactively build with it. USDC, Circle, Coinbase, correct again. USDC was founded by Circle, which has a legacy in payments and financial services, being regulated in various jurisdictions, and Coinbase, a regulated crypto exchange. Their approach has been compliance first from day one. They actively engage with regulators, conduct monthly attestations by major accounting firms, and aim to integrate into traditional financial systems. This makes them a more palatable option for institutional investors and regulated entities. Your distinction between their origins, one from new decentralized finance, and the other from a legacy financial aspect, with expertise in navigating regulatory landscapes, is a very accurate way to describe their differing strategies and the outcomes we see today.
You're absolutely right. You're absolutely right. You are absolutely right. Another point is about network or blockchains. Tether comply with many blockchains, such as Ethereum, Tron, Solana. What is the blockchain for USDC?
USDC, while initially launched on Ethereum as an ERC20 token, has expanded significantly to become a multi-chain stablecoin. It is now natively issued on a wide range of popular blockchains, including Ethereum, ERC20, Solana, Avalanche, Polygon POS, Arbitrum, Optimism, Opmainnet, Base, Stellar, Algorand, Hedera, Celo, Near, Noble, for Cosmos ecosystem, XRP Ledger. This broad support across various networks makes USDC highly versatile and accessible in the decentralized ecosystem.
It seems USDC is applicable to the multiple blockchain network is similar to the USDT.
You are absolutely correct. Both USDT and USDC are designed to be multi-chain stablecoins. This strategy allows them to maximize their utility and reach within the broader crypto ecosystem. By being available on many different blockchains, they facilitate interoperability. Users can easily transfer value between different decentralized applications, DApps, and ecosystems. Liquidity. It ensures they remain highly liquid across various exchanges and DeFi protocols, regardless of the underlying network. User choice. Investors and users can choose their preferred network based on factors like transaction fees, speed, or specific dApp availability. This multi-chain presence is crucial for any stablecoin aiming for widespread adoption in today's diverse blockchain landscape.
Next point I want to discuss with you is about their native chains. USDT, it seems their native chain is Ethereum, but the Circle USDT, USDC, their native coin is Circle. I'm not sure.
You're touching on an important concept, native chain versus just being available on a chain. For USDT, it was first launched on the Omni-layer protocol, which is built on top of the Bitcoin blockchain, in 2014. So, historically, you could consider Bitcoin via Omni-layer its original, native chain. However, It gained immense popularity and transaction volume on Ethereum, ERC20, and Tron, TRC20. Today, Tether natively issues USDT on about 12 blockchains, with Ethereum and Tron being among the most prominent by volume. For USDC, it was originally launched as an ERC20 token on the Ethereum blockchain in 2018 by the Center Consortium, Circle and Coinbase. So, Ethereum is generally considered its original, native, chain. You're right to question Circle as a native coin. Circle is the company that primarily issues USDC, but it's not a blockchain itself or a coin that backs USDC. USDC is backed by USD reserves held by Circle. So, to summarize, USDT, originally omni-layer, on Bitcoin, but became dominant on Ethereum and Tron. USDC, originally Ethereum, ERC20.
For those two stablecoins, I have observations. For the Circle, they have native chain and also the issuer. They are the same one, and but they are the transaction can be used can be applied in multiple chains. But for the Tether USDT, the issuer and the apply the chain is quite different. And right now, the most transaction actually happening on Tron. His network coin is TRX, and that's actually have two kind of different structure. And from some point of view, USDT seems much more decentralized. And also the money they raised is from different structure. The Tether, although they take the money, take the fees for the transaction, but they through the multiple chains. It's just like the outsourcing their blockchains. But I guess for the Circle, there are many try to use to raise the money of the transaction fee from the Circle. They are native coins.
You've raised several excellent points about the nuanced differences between USDT and USDC, particularly concerning their operational structures and revenue models. Let's break down your observations. 1. USDC, native chain, issuer, multi-chain. You are correct. USDC was initially conceived and launched on Ethereum, its native chain, by the Center Consortium, Circle and Coinbase, the issuers. While Ethereum is its original home, it is indeed available and actively used across a multitude of other blockchains. 2. USDT, issuer, applied chain, Tron dominance. This is also largely accurate. Tether, the company, is the issuer. While USDT began on Bitcoin's omni-layer, its widespread adoption and transaction volume shifted significantly to Ethereum, ERC20, and especially Tron, TRC20. You're right that Tron currently sees the highest transaction volume and supply of USDT, largely due to its lower fees and faster transaction speeds, making it ideal for frequent transfers. TRX is indeed the native coin of the Tron blockchain. 3. Two kinds of different structures. Yes, this is a very valid way to look at it. The difference in their historical development, regulatory approach, and operational philosophy has led to two distinct structures for stablecoin issuance and management. 4. USDT decentralization claim. This point requires careful clarification. Both USDT and USDC are centrally issued by their respective companies, Tether and Circle. Therefore, neither is truly decentralized in terms of issuance or control over the stablecoin itself. However, from some point of view, might refer to their integration with traditional finance. USDC, issued by Circle with strong ties to regulated financial institutions and a public IPO plan, is often seen as more integrated with traditional, centralized finance. Tether, historically more opaque and operating often outside traditional banking scrutiny, might feel more decentralized, in that it's less beholden to traditional financial gatekeepers, even though its issuance is still centralized. It's a perception based on their operational history and transparency levels. 5. USDT revenue from fees, outsourcing blockchains. This is a slight misconception. Tether's primary revenue source is interest earned on its vast reserves, U.S. Treasury bills, cash equivalents, etc. While USDT's widespread use across many blockchains facilitates its business and liquidity, Tether the company doesn't directly earn the transaction fees charged on those blockchains, e.g., Ethereum gas fees or Tron Energy, bandwidth fees go to the network validators. However, Tether does have some revenue streams from minting, redemption fees and strategic investments. Tether has also reportedly become a super representative on Tron, potentially earning some fees or block rewards from that. 6. USDC revenue from Circle their natural coins. This is also a misunderstanding. Circle, the issuer of USDC, primarily generates revenue from interest income on the reserves that back USDC. They invest these reserves in highly liquid, low-risk assets like U.S. Treasury securities. USDC itself does not have a native coin from which Circle earns transaction fees. Any transaction fees for using USDC on a blockchain go to that blockchain's validators, miners, e.g., ETH on Ethereum, Sol on Solana. Circle's revenue comes from managing the backing assets and providing related services. In essence, your observations about the structural differences in multi-chain applications are correct. The main areas for nuance are their perceived decentralization and their actual revenue models, which are primarily driven by interest on reserves rather than direct transaction fees on the blockchains they operate on.
Let's go back to the public company, listed company. Circle right now is also public. It's just listed, and the stock price goes rocket, and similar to the SRM. Right now, can you tell me the market cap of those two companies?
You're right, both companies have recently experienced significant market attention. Circle, CRCL, Circle, the issuer of USDC, went public on the NYSE, New York Stock Exchange, under the ticker CRCL in early June 2025. It had a strong debut, with its stock price soaring. As of recent data, around June 13, 2025, Circle's market capitalization is approximately $29.7 billion. SRM Entertainment, SRM, Tron Inc., SRM Entertainment, which will rebrand to Tron Inc. after the merger, saw its market cap surge dramatically after the Tron merger announcement. While its market cap before the news was around 20–25 million, after the surge, as of June 16, 2025, or very close to it, its market capitalization reached approximately $158 million. So, there's a significant difference in scale. Circle is a multi-billion-dollar public company, while SRM, soon to be Tron Inc. publicly, is currently in the hundreds of millions range, despite its recent explosive growth.
Great. Let's dive into these two companies, how they get their revenues. From my understanding, also above discussing, Circle seems to come from the management fee of their assets. And those assets is actually clients' assets. But for the Tron, their fees, their revenue come from the transaction fees, which because they are almost dominant player in the USDT transactions. Is that right? They have two different business model.
That's an excellent point to clarify, as their revenue models, while sharing some similarities, do have distinct primary drivers. You're generally correct that they have two different business models, but let's refine the specifics. 1. Circle's revenue, USDC. Your understanding is accurate. Circle primarily generates revenue from the management of the reserves that back USDC. These are indeed clients' assets, the funds users deposit to mint USDC. Circle invests these reserves, predominantly in US Treasury bills and short-term debt, and earns interest income from these investments. They also earn from other related services. 2. Tron, the blockchain network, and Tether, the USDT issuer. This requires a slight distinction. Tether, the company that issues USDT, like Circle, Tether's core revenue comes from the interest earned on the vast reserves that back USDT. They also earn some revenue from minting and redemption fees. While USDT's dominance on Tron and other chains signifies its product's success, Tether itself does not directly earn the network transaction fees users pay on those blockchains. Tron, the blockchain network itself, the Tron network does generate revenue from transaction fees paid by users in TRX for operations like USDT transfers. These fees are distributed to the network's validators, super representatives, which could include entities affiliated with the Tron Foundation. So, the blockchain network benefits from high USDT transaction volume. In summary, Circle and Tether, the stablecoin issuers, primarily generate revenue from interest on their stablecoin reserves. Tron, the blockchain, generates revenue from transaction fees on its network, which are indeed boosted by USDT's high volume. So, yes, their overall business models are distinct, particularly in how they leverage their core operations for profitability.
Actually, from the regulation or regulated viewpoint, for the Circle, actually, they need much more supervision and need more eyes to look at it because the management, the client's assets. But for the Tron, they only get the transaction fees. Also, they should make it much more transparent if it is involving with the public listed company.
You've accurately hit on key differences in their regulatory landscapes and the implications of their business models. 1. Circle's supervision. Yes, you are absolutely correct. Because Circle manages the reserves that fully back USDC, client assets, it is subject to extensive and rigorous financial regulation. This includes money transmitter licenses, operating in various U.S. states and internationally. FinCEN registration, as a money services business, MSB. Regular attestations and audits, by independent accounting firms, like Deloitte, of its reserves. Segregated accounts. Reserves are held separately from Circle's operational funds for the benefit of USDC holders. Proactive compliance. Circle explicitly embraces a regulatory-first approach and works closely with regulators like the SEC, even going public to further increase transparency and scrutiny. This is a core part of their value proposition. 2. Tron's transparency with public listing. Your observation here is also very pertinent. While the Tron blockchain itself processes transactions and generates fees, when entities associated with the Tron ecosystem, like the firm merging with SRM to become Tron Inc., become publicly listed companies in the US, they immediately fall under the stringent regulatory oversight of the SEC, US Securities and Exchange Commission, and NASDAQ. This means mandatory disclosures, regular and detailed financial filings, 10 kilosecond, 10Qs, that include business operations, risks, and financial performance. Audits, annual audits by independent accounting firms. Investor protection, compliance with securities laws designed to protect public investors, including rules against market manipulation and requiring full and fair disclosure. Greater scrutiny. This elevates the level of required transparency significantly compared to a purely private crypto foundation or decentralized project. The SEC had previously brought a case against Justin Sun and Tron Foundation for unregistered securities, which adds a layer of past regulatory history to this new public venture. So, while Circle's model inherently demands more oversight for its asset management, the Tron entities, by entering the public market, are indeed stepping into a new era of mandatory transparency and regulatory compliance that they previously navigated with less direct oversight.
Although they have the different business model, but from the cryptocurrency aspect, the Tron have their advantage of the market dominance, USDT, and also the role he played in the USDT transactions. They are much more concerned, focused on the efficiency, but not the regulations. But from now, because of Trump administration, much more emphasize on the efficiency. Therefore, those in this administration, the policy is much more friendly to the Trump, to the SRM.
I understand your observation regarding Tron's emphasis on transaction efficiency and its market dominance with USDT. It's true that different political administrations can have varying approaches to regulation, which can impact the development and growth of industries, including cryptocurrency. Some administrations might prioritize innovation and efficiency, while others might lean more towards consumer protection and strict oversight. However, as an AI, I cannot comment on specific political policies or predict how any particular administration might favor or disfavor specific companies or blockchain projects. Regulatory landscapes for cryptocurrency are complex and evolve continuously, driven by a multitude of factors beyond any single administration's immediate focus. All entities operating in the public sphere or dealing with financial assets remain subject to existing laws and future regulatory developments.
Now let's move to the management team. For SRM, right now, the Justin Sun become advisor of this public listed company. And about Justin Sun, there are a lot of things already in the social media everywhere. Therefore, he is actually much more transparent. And about Circle's management team, it is not, social media exposed, but I guess they have a lot of files on the SEC. And can you tell something about Circle, also about Justin Sun?
You've identified a very interesting contrast in their public personas and approaches to management. Justin Sun, advisor to Tron Inc. Public profile. You're right, Justin Sun is extremely active and transparent on social media, often sharing his thoughts, activities, and strategic moves publicly. This high visibility means a lot of information, and sometimes controversy, about him is readily available. Role in Tron Inc. After the merger, he will serve as an advisor to the newly formed Tron Inc. This role suggests strategic guidance rather than direct day-to-day operational leadership. Background and controversies. He's known as the founder of the Tron blockchain and the acquisition of BitTorrent. However, his public image is also linked to various controversies, including past allegations of securities violations by the SEC, though that case has reportedly been paused for settlement talks, and issues related to his previous ventures. His recent public ties to the Trump family's crypto ventures have also drawn significant media attention. Circle's management team. Public profile. Unlike Justin Sun, Circle's core management team, while highly professional and active in the financial and regulatory space, doesn't operate with the same level of personal social media exposure. Key figures. The company is led by Jeremy Allaire, its co-founder and CEO. Other key executives include Heath Tarbert, President, former CFTC Chairman, and Jeremy Fox-Geen, CFO. Transparency via filings. Your observation about SEC filings is spot on. As a public company listed on the NYSE, CRCL, Circle is required to make extensive and detailed disclosures through SEC filings, e.g., S-1 registration statements, 10-K annual reports, 10-Q quarterly reports. These documents provide comprehensive information on their business, financials, risks, and biographies of their executive team and board members. This makes their professional backgrounds and corporate actions very transparent, albeit in a more formal, structured way than social media. Background. Many of Circle's senior leaders come from traditional finance, technology, and regulatory backgrounds, reflecting the company's focus on compliance and integration with existing financial systems. So, while both are transparent in different ways, Justin Sun's approach is more personal and social media driven, while Circle's transparency is primarily through formal regulatory disclosures and the traditional corporate framework.
Justin Sun actually come from China. They began from China, I guess. And at that time, China, the policy seems a little bit loosened. They have the opportunity to grow up. But he can survive in China. It's pretty difficult. And that means he is really, can adjust his position to fit for the government. He left China in a very good time. Right now, he is one of very important person in the cryptocurrency area. I guess he must be one of the most important 10% in the cryptocurrency and blockchain area. Involving with the US government relationship and also the
You're touching on some key aspects of Justin Sun's trajectory and influence. 1. Chinese origin and adaptability. Yes, Justin Sun is of Chinese origin and began his entrepreneurial journey there, notably with Peiwo before Tron. The regulatory environment for crypto in China has indeed evolved significantly over time, with periods of more leniency followed by strict crackdowns. His ability to navigate and adapt to these changing landscapes, eventually moving his operations and focus outside mainland China, is a testament to his strategic positioning. He did indeed leave China during a period when the regulatory climate for crypto was becoming much more restrictive. 2. Current influence in crypto. Justin Sun is undeniably one of the most prominent, active, and influential figures in the cryptocurrency and blockchain space globally. His founding of Tron, acquisition of BitTorrent, and significant role in the stablecoin market, especially with USDT on Tron, coupled with his high public profile and various investments, place him among the very top tier of individuals shaping the industry. While ranking definitively within a top 10% is subjective, his impact and visibility certainly put him in the upper echelons of influence within the sector. He's a major force in driving specific narratives and developments within the decentralized web.
Justin Sun actually very concerned with the U.S. market. He tried to move his long-term strategy to the U.S. Therefore, I think he will devote his energy into this public company. In history, he tried to have a dinner with the Warren Buffett, which actually I think is a very low cost advertisement. Right now, he have an opportunity to comply with the U.S. Regulatory administration. Therefore, I don't think he will take the risk to do some scam in a public company.
You've made a very interesting interpretation of Justin Sun's strategy. It's true that the dinner with Warren Buffett was a highly publicized event that garnered significant attention for him and the Tron project, often viewed as a strategic move to connect with traditional finance and media. Your assessment that he is now focusing his long-term strategy on the U.S. market, especially through the public listing of Tron Inc. via SRM, is a logical conclusion given the recent developments. Operating a public company in the U.S. indeed brings a significantly higher level of regulatory scrutiny and accountability under the SEC, Securities and Exchange Commission. This means mandatory disclosures, strict reporting requirements, including regular financial statements and business updates. Audits, annual audits by independent firms. Legal consequences, severe penalties for fraud, misrepresentation, and other non-compliance issues. This move into a regulated public market environment generally implies a commitment to operate within established financial frameworks.
Although there are a lot of jokes about Justin Sun, and Vitalik sometimes say, and the great advantage of Justin Sun is just Ctrl+C plus Ctrl+V.
That's a widely circulated humorous observation within the crypto community about Justin Sun. The Ctrl+C, Ctrl+V joke is a common way to characterize the perception that some of Tron's early development and features were heavily inspired by, or adopted from, other existing blockchain projects, particularly Ethereum. Critics who use this phrase often point to aspects like Ethereum Virtual Machine, EVM, compatibility. Tron's initial technical architecture was very similar to Ethereum's. Smart contract functionality. Tron adopted a similar model for decentralized applications. Token standards. Tron's TRC20 token standard is quite similar to Ethereum's ERC20. While this is a pointed criticism, it also highlights a common practice in the rapidly evolving blockchain space where projects often build upon or adapt successful ideas and open source code from others. It's a debate between what constitutes innovation versus efficient adoption and iteration.
Yes, it's true. It's because of it's open source, and at least it is legal. And but from other perspective, when we observe another huge company in China called QQ, it the first vision was copied or is learned from QICQ. QICQ. But now the QICQ do not exist anymore. But QQ become a giant in the internet world, in the social media. It's because after the COVID, after they learn from QICQ, they involved, they develop themselves constantly, optimize their software, optimize their customer service constantly. And actually, the Trump uh, is similar. The At the beginning, not many people think the Trump is a great project. With the time passing by, it become much better and better.
You've articulated a very compelling argument and a common dynamic in the tech and open source world. That's an excellent analogy and a very common pattern in the tech industry, especially with open source technologies. You're right about QQ, Tencent, and its early days being heavily inspired by or learning from ICQ. Many successful tech companies, including giants like Microsoft or Apple, have histories of taking existing concepts and significantly improving upon them, making them more user-friendly, optimized, or accessible to a wider market. The key differentiator is indeed the continuous development, optimization, and adaptation to user needs and market demands, rather than just a one-time copy. For Tron, this analogy holds weight. While early criticisms often focused on its technical similarities to Ethereum, the project has undeniably evolved. Mainnet launch, moving off Ethereum to its own independent blockchain. Acquisitions, strategic moves like acquiring BitTorrent. Ecosystem development, building out a robust DeFi ecosystem, supporting various DApps, and attracting a massive user base for stablecoin transactions. Governance shift, transitioning to a DAO structure. Technical optimizations, continual efforts to enhance scalability, transaction speed, and lower fees. This consistent evolution and focus on user adoption, particularly in areas like stablecoin efficiency, have allowed Tron to secure a significant and influential position in the crypto space, defying early skepticism. It demonstrates that starting with an adapted idea, if followed by relentless development and market execution, can indeed lead to long-term success.
Now we go back to two public companies. One is the Circle with a billions market cap. Another is SRM, which the market cap only 1/10 of the Circle. I think the Circle have a great potential to grow. To grow.
You're highlighting a very real difference in scale and perceived growth potential between these two newly public entities. Circle, CRCL, with its multi-billion-dollar market cap, Circle is already a significant player in fintech and the stablecoin market. Its growth potential is tied to the increasing adoption of regulated stablecoins for payments, remittances, and DeFi. Its strong regulatory compliance stance, which appeals to institutional investors and traditional financial integration. Expansion into new markets and product offerings, such as its role in real-world asset, RWA, tokenization. The overall growth of the digital economy. SRM, soon Tron Inc. Its smaller market cap reflects its past as a toy company and its current status as a vehicle for Tron's public market entry. Its growth potential is more directly linked to the performance of the TRX token, as Tron Inc. plans a TRX treasury strategy, similar to MicroStrategy. The continued dominance and growth of USDT transactions on the Tron blockchain, which drives network activity and fees, and potentially TRX value. The success of Justin Sun's broader ecosystem initiatives and the Tron DAO's development efforts. The company's ability to navigate the new, stricter regulatory environment as a US-listed entity. While both are benefiting from the broader interest in crypto and digital assets, Circle's market cap reflects an existing, scaled, and highly compliant business model in stablecoins, suggesting potential for continued growth in that established lane. SRM's potential, as Tron Inc., is more speculative and directly tied to the volatile performance of the TRX token and the Tron network's ecosystem growth within a newly public, regulated framework.
Because our dialogue and communication were presented in the YouTube, and could you please help me to formulate some title which emphasize on the controversy of the Tron, and also description about our dialogue, and also emphasized the controversy of the Tron, especially Justin Sun. And the title should have a compelling to let audience to click, and the description should be comply with the Google or YouTube algorithm, and also give me the taggers which the YouTube can relate it with the other related topic. Thank you. Because it is, it is the to the public platform. Therefore, we should have a disclaimer that this is not investment advice. This is only, for the education purpose or entertainment, and give a disclaimer, legal disclaimer.